Good morning, everybody, and welcome to Beat the Bell, presented by King Capital. Happy Friday. Happy almost Christmas, Christmas Eve. We hope that everybody had an awesome week of trading. We did in the King Capital Discord. A lot of fun. There was just a lot of opportunity on both sides this week. Of course, we had yesterday's sell-off, but then the huge rally back intraday. And that's the type of price action that we love to see as day traders. So to talk about our trading this week and what we can expect today, we have an awesome panel with us, starting with Coach Dipka. Coach Dipka, good morning.
Morning, guys. Happy holidays. Excited for this one. I'm not particularly excited about the volume, but sometimes we get these nice rallies, these steady trends on the last day before holiday. So we'll see. Excited for today. Let's get after it.
Yeah, I will say, again, this week kind of makes me want to stick around today. Typically, the Friday before a holiday or the day before a holiday, I'd probably be out of here early, but we'll see. Maybe we get something good today. All right, Diamond Trades.
Guys, what's going on? Happy almost Christmas. Let's get after it today. Enjoy the trading day and then enjoy our weekends off.
All right, Money Mander.
Good morning. Happy holidays. So today's supposed to be the technical start of your Santa rally. So I'm real curious to see what we get today.
That's right. All right, Mo.
Good morning, Hondo. Expecting the same thing, slow day, but let's still look to end the week strong. And looks like we have a special guest right up there on BTV today watching us. So looking forward to that.
If you didn't point it out, I was going to. Looks like the cat is in the background today. All right, last but not least, Stock Sniper.
What's up, guys? Looking for a similar kind of thing towards what Coach and Hondo were saying. Maybe we get a Christmas present early.
All right, we'll have to wait and see what's in store today. But to talk about today's economic outlook and the Fed forecast, we have our macro experts with us, Diamond and Money Mander.
Yeah, so let's start with the data that just came out because we had a ton of data come out at 8:30, and we can go ahead and cover that before we get started. So we had personal income and personal spending both come in. Personal income came in slightly over expectation, 0.4 versus 0.3 expected. Personal spending came in slightly under expectation, 0.1% increase month over month versus 0.2 expected. So a beat on income, miss on spending. Durable goods came in minus 2.1%. That's a pretty strong beat. I mean, a pretty strong miss. That expected 0.5%. On durable good orders month over month. So durable goods seems to have not picked up, not held up this month as well as they would have liked. PCE came in basically in line with expectations. So the PCE price index year over year came in at 5.5% versus 5.5% expected. Not much of a change there. Core PCE came in 4.7 versus 4.7% expected. So a lot of the news this morning came in line with the exception of that durable goods number month over month, which came down sharper than anticipated. We also had building permits come in at 825, which also came in lighter than anticipated. 1.35 million expected versus 1.34, I believe. So the data this morning, really not crazy outside of that durable goods number. Everything is pretty much in line. We do still have new home sales to come at 10 o'clock, and we also have Michigan consumer sentiment to come at 10 o'clock. But what do you think of this news so far at 8:30, Mander? It seems to have not really moved markets all too much. It seems like we sold off about 20 points initially in futures, but that has been already eaten up here.
Yeah, I haven't checked markets, but I think that's kind of realistic here. Everything really came in exactly at expectations and forecasts. And I think that's kind of to be expected because after you have your CPI print, you pretty much get a good gauge of where you think PCE is going to come in at. The one thing that stood out to me as we looked at these and where else are you getting breaking news dissected like this is the personal spending and durable goods. So personal spending was one that really came in a little bit significantly under expectations at 0.1% versus 0.3. I think that's pretty definitely worth noting that personal spending is already coming down month over month. Now, I think the next month we'll see how that comes in because now if it's already down for November, we'll see with the holiday spending how that reacts next month. But that's something to note for me, at least, as we're seeing the consumer finally start to spend less.
Right. And I mean, we're going to touch on this a little bit later in this segment with Tesla too. But that's definitely something that stood out to me, that consumer spending number. But like I said, we'll dive into that a little bit deeper later on.
All right, so let's take something here that's been the talk of town on Fintwit recently. Let's cover this JP Morgan options collar that expires here at the end of the year on December 30th. So if you don't know, what JP Morgan does every quarter is they have this hedged equity fund where they hold a basket of long common shares. That's obviously going to be the majority of the fund. However, this fund hedges itself with a 3-leg options collar every quarter. And so they roll this over. So on September 30th, they rolled over into the quarter 4 for December. Pretty much all of the legs of the option collar are pretty much washed. They're gone and irrelevant, except for the one leg where they shorted 44,500 of the 38-35 calls on SPX. They put all 3 legs on SPX options. Now, basically what this does is they were short those to collect premium, right? They short 2 legs of it and they long a put leg that gets them into a net credit. They actually sell more premium than they buy. However, what this does, this forces dealers who had to sell them or had to buy them from JP Morgan shorting them into basically a $500 million long on the 38-35 calls. And so if you think about this, it has a plus or minus $4.5 million delta for every point over or under 38-35 that we close the year. They expire on December 30th. So this is one thing I know everyone's been watching as we get price action trading around this now off of the CPI print and then the Fed sell-off that we had last week. This is really kind of like people are thinking that we're going to bounce around and they're going to pin it right here, right? The thing that I think is interesting is whether that actually happens, where we close the year. I don't think it's going to be too relevant of this options collar. But I think it's worth noting that if you're a dealer, you're sweating right now and you're really banking on the Santa rally because your break evens all the way up at 39.45. Under that, you're losing money, but under 38.35, where the strike, you lost $500 million. JP Morgan collected the full premium. So I want to get your take on that really quickly.
I just think it's like whenever I see sort of these things on Fintwit, I don't try to necessarily extrapolate out what the impact on the equity markets is going to be because I think that can be really difficult and complex, right? There's like a lot of complex relationships going on. The one thing that I do pay attention to though is like exactly like you said, right? That 38-35 level. If you look at the SPX chart over the last 3 days, we're just continuously trading around that level. And think about all the hedging activity that has to go on as we trade through into above and below that level. And that's represented in the charts in the last 3 days, right? We had a wild price swing away from that level on Monday. We open up on Tuesday and we crater right away from it. And then almost like a magnet gets sucked back towards the end of the day. So I think that if we're going to continue to trade around that level today, we can sort of expect a bit more volatility like we've seen in the past couple of days. And I know that for traders like us, that shapes up for a really interesting day. So that's what I'll be looking for today, some continued volatility around this level. As long as we're trading, in that 38-35, 38-40, 38-45 area. For sure.
Yeah, I wanted to say it was Fugazi as well because in the grand scheme, $500 million is not holistically that much in terms of quarterly SPX options. Like a lot more than that get traded, but seemingly we keep getting pinned to it regardless. And so last thing I want to hit on for you guys today is Morgan Stanley's chief strategist, Wilson, actually just came out with a new forecast for 2023. And it looks like he's been paying attention to Bet the Bell. Now, whether he actually watches or not, I don't know. But he's seeing very similar sentiment that me and Diamond have been covering in that whether we see the Santa rally into the end of the year, who knows, right? Seasonality does exist. We're in a bear market, so, it's kind of up in the air. But as we turn the corner into the next year, he's really seeing significant downside off of an earnings risk fueling downside. And so what he's saying by that is, like we've been saying, is that as we turn the corner into the new year, we're already seeing personal spending come down month over month, as shown by the data this morning. He's really expecting consumer spending to come significantly down as maybe the holiday season fuels something. You had Black Friday spending. You had a lot of things in the markets that kind of are in the calendar year that really stimulated some spending towards the end of the year. But as we turn the corner, he's expecting companies to be pulling in significantly less revenues and significantly miss, especially on EPS, I would assume, where as expenses continue to stay high with sticky inflation, wage demands. People are still wanting to get paid more to get forced back into the labor force. He's really expecting to see an EPS slide that puts us down. They're predicting all the way down to 3,000.
Yeah, keep Morgan Stanley's Mike Wilson away from Mo Mamba. That guy hates Morgan Stanley analysts. So we'll keep that between us. I know Mo's not trying to hear it, but that's a good actually segue into the last topic that I want to cover. very quickly before we pass it back is Tesla. So Tesla doubled their discounts that they're offering on the Model 3 and the Model Y electric vehicles. This is very weird and unusual for Tesla. They usually don't offer these types of discounts. And so it's sort of adding to concerns of demand for autos. Particularly Tesla has been softening. Musk sort of maintains that the biggest problem at Tesla is really a production problem due to the supply chain issues connected to COVID and not a demand issue. The stock was down nearly 9% yesterday and 61% off the September highs. Between Elon selling shares for his Twitter purchase and concerns about, the CEO sort of being stretched too thin, having too much on his plate. And now there's these demand concerns. It really ties into what you were talking about, that earnings slump that we could potentially see among some of these major companies going into 2023. So something to keep an eye on. I know that we're going to have a question on Tesla later for Bet the Bell. But we're going to pass it back to Alejandro. That's going to wrap it up for us here today.
Awesome, guys. Thank you. Let's talk about the system now. And I want to start off here. I feel the need to kind of defend myself or clarify some of the questions I've been getting on my Twitter. Every time we start ripping, first off, the trolls come out of the woodworks. People start talking their talk, and they say the system is lagging. Well, yeah, the moving averages are lagging indicators. Nobody has ever denied that, ever. It's a moving average. It uses historical price data, okay? Does that mean we can't use the system to predict future price? Absolutely not. That's what we do. That's why we're successful. That's why we're able to use this strategy to trade the markets. So I don't want anybody else on my Twitter saying the system is lagging, the buy signal, after the buy signal, it sold. After the sell signal, it got bought up. Here's the bottom line. I've got plenty of videos out there. I tweet all day long teaching you guys how to use it. Don't take it from me. Go through my Twitter account and take a look at everybody who is ripping using the system, and then come back and ask me if the system works. Now, let's get into it. This week, we got the break over the 50 SMA, followed by the buy signal, which was good for about 40 points to the long side. Winning trade there. Then we turned around and we got the break below the 50 SMA on the 30-minute chart, good for about a 75-point drop. Winning trade there. Remember, the other piece of the puzzle, which is extremely, extremely important, is the hourly chart. In the video I made the night after we got the rally, the 40-point rally, when the market started to stall, I said yesterday would be a proceed with caution type trading day. The reason for that is because we hadn't broken over the 50 SMA on the 1 hour SPX chart. So until we break over that, we don't have that real confirmation that, all right, the bears are in control and we could really start to see a real rally. So it was a proceed with caution. And what happened? GDP estimates come out. The market sells off. Obviously, we hit resistance up here at the 1 hour 50 SMA. So you were prepared to trade the short side. And then, of course, we got that awesome opportunity to trade short yesterday on the breakdown below the 50 SMA on the 30-minute chart. And again, we anticipate the sell signal. We anticipate this breakdown. We use the 50 SMA as our risk level. Okay, guys? So now what are we looking at today? The market has been wild, guys. It's the fucking Wild West this week, clearly. Rip, sell off, rip. What do we have in store today? The 50 SMA is likely going to tell us a story, but the main focus is not the 50 SMA on the 30-minute chart. That's, checkpoint one. If we break over that, okay, then, you can start getting interested in longs. But guys, this 50 SMA on the 1 hour chart is clearly no joke. I love to talk about the angle of the 50 SMA. When it's in a strong downtrend, that is the visual representation that the market is in a downtrend. So in order to break that downtrend, common sense type thinking, we have to break back over that 50 SMA on the 1 hour chart. So going long into it when it's in a strong downtrend with not a lot of reward. Earlier in the week, when we got that buy signal, went long, there was still about 50 points up to that 50 SMA. So that kind of makes sense. But let's say we're trading higher today and the 50 SMA on the 1 hour chart's only about 20 points away. Maybe you could go in for a scalp. The way I like to trade, I need a lot more potential reward. So that's my thinking going into today, guys. And then, of course, if we can't break over it and we continue to sell off, it's pretty simple. We would be trading under the 50 SMA on both charts. I always like to avoid the chop zone, the area between the 10 and the 50 SMA, but then you could look for more potential downside. All right. So hopefully that clarifies everything that happened in the system this week. Again, so many people were tagging me in gains all week. We're all fired up. It was a lot of fun seeing everybody really, take advantage of this system. And it's awesome that we're building the community and more people are using it. So it made for a really, really good week on my end. And I appreciate all of you for interacting with me on Twitter and in the Discord. All right, guys. I'm going to go ahead and pass it over to Coach Dipka now, who's got Bet the Bell in replacement of Ramsey.
Yeah, good morning, everybody. Good morning. So we're going to start it off with a classic here, the number one Bet the Bell question. We're going to go with, what are you guys thinking for today? The people want to know what you think the S&P 500 will close today, green or red. We'll start with diamond trades here.
Sorry, I was muted. I will go with green. I think they give us a present before Christmas. I'm going to go green.
All right, Money Mander.
I'm taking red. I saw how hard the dead cat bounce was faded yesterday. We're trading just about flat, I believe, in futures right now. I'm going to take red.
You are mistaken there.
Slightly
Futures
red.
are actually ripping at the moment.
What's ripping? 10 points?
40 points off the lows.
They're coming
here.
back down now.
Now it's coming back down.
My sentiment. I think we closed slightly red.
All right. Mo Mamba, what are you thinking here?
What's up, brother? I'm thinking we close slightly green today. Nice. We held that daily demand yesterday, so we'll see a bit of a green day today. Yeah.
All right. Thank you very much. All right. We're going to move on to question number 2 for Bet the Bell. Okay. The talk of the town. He's been selling himself. What are you guys thinking? Tesla over under $120 come the beginning of January. We're going to start with Stock Sniper here.
I think Tesla's going to be under $120. I think Elon's got some more shares to sell, and nobody wants to be in Tesla after Elon's selling shares. You want to get Tesla after he's done selling shares. You know what I mean? And figuratively, I think he's got some more shares to sell within the next couple of days. So, yeah, I think we're going to be under 120.
All right. I see Dwayne Trade raising his hand, so we're going to go with Diamond Trades here.
Sniper, you should have done your what? No. No. Thank you. Sniper, you should have done your homework, brother. Last night on Spaces, Elon came on saying that he's done selling till at least 2025, meaning that Tesla, in my opinion, is likely to see a rally from these levels. I'm going over.
Dwayne, I'm going to have to jump in here and say that, while you may have done your homework, is Elon really trustworthy? He has said before that he is done selling Tesla. Now, he didn't get too specific, maybe intentionally, but I don't really trust the guy right now based on what he said last time and then his action, a couple months or weeks later. So, Money Mander, what do you got here?
Yeah, I'm taking the under as well. I don't think anyone wants to jump in front of this and catch the falling knife, and I don't have any support down here really until 110 to 100. So I don't see a rally here.
Yeah, and I think it's interesting to just point out that Tesla was trading in the 300s just 2 months ago in September, 2.5 months ago, right? And now we're facing the possibility of $100 a share any day now. Pretty insane. We'll take one more here. We'll go with Mo Mamba.
All right, I'm going to line up with Hondo on this one. We have some decent support, not great support on the daily at 120. I'm going to say over on this one. Of course, the biggest, the bigger support on the daily time frame would be that 110 that Sal just hit on. But we do have some decent support. And with Hondo doing his homework, you got to go with the guy that's doing his homework. I'm cheating off him today, so I'm going with the over.
All right, and now we got one last question, a little Christmas theme here, but I want to give a hypothetical situation. So I have struggled to find a gift for one of my parents, right? And I want to know if I could gift them any stock for 2023, what would it be? And keep in mind, don't base it on dollar value, because we'll say in this hypothetical situation that you would buy the same amount of shares to make up for the price. So, if it was Apple at 130, you'd buy about 10 shares, make it 1,000 even, right? So we'll start with Diamond Trades 2023. What stock you buying for your parents for Christmas?
I would buy my parents Google, and while they may not love me at the end of 2023, I think that they would really love me by like the end of 2025, like 2026. So I'm going to go with Google. I think, massive moat, great company. Can't go wrong.
Yeah, and I'm in the same boat as you there. Same thinking with 2023 may see a little bit of a bumpy road, but as we roll to 2024, I think we can maybe crawl out of this hole. Mo Mamba, what do you got?
Absolutely nothing. Why would I give them money just to give it away? Absolutely nothing. Would not give them anything. That's just teasing them. That's a horrible gift.
You gotta give an answer, because I'm personally curious.
AMC, the cheapest, one of the cheapest, I guess, ape meme takers out there. I'm not giving them anything too pricey. Definitely something cheap, because they're gonna give it away. So ask me next year.
All right. Well, I already see Money Mander like salivating over there in the corner. What do you got here?
Yeah, so I'm not delusional, and my mom's approaching retirement age here. She doesn't have time to be bagged until 2026 in diamond sentiment. So I'm gonna get her a 10-year treasury, like a realistic man here, something that'll actually make money over the next couple of years while she's not getting bagged. Like, I'm gonna.
It's not
get
the
her
question, dude. The question is,
That's
what
not
stock
the
would you pay your
question.
mom? Like, enough. What? That's not the question. Answer the question, Mander.
So
What stock you go to your mother?
I'll get her a share of TLT. Maybe Yield Top isn't in yet. Like, it's the only thing with any type of hope.
This guy.
Stock Sniper, what do you got, my friend?
I'm gonna have to get my parents Carvana.
Dude,
what's the reason for that?
Just because I think that Carvana could, I can't even bullshit that. I would have to go with Apple, to be honest. Not to sound basic, but nobody makes more money than Apple.
All right, Alejandro.
So, as I mentioned earlier, I listened to Elon on Spaces last night, and I'm pretty fired up about Tesla now. I would gift my mom Tesla. I mean, the guy came on Spaces first off, and you guys have seen the tweets, and you've seen him mention it, that he thinks Tesla is going to be the most valuable company in the world one day. Sure. I mean, right now, is there a demand problem? Yeah. I mean, the price of a car is effectively more expensive as rates continue to go higher, but it's Elon Musk, and I see this as an opportunity to position for the long term. So, Mom, Tesla, maybe she'll be 10 times as wealthy come 2030.
Yeah, and you have to speculate the possibility of him stepping down from Twitter. I mean, he's hinted at it, seemingly a little sarcastic. There's been some takes saying that he's just doing it to hunt down bots on his polls. I mean, who knows? But he's a man that has followed up with these little Twitter polls in the past. So it would not surprise me if that sort of sent Tesla decently higher in the coming weeks. So we'll look out for that. But that's going to do it for Beat the Bell or Bet the Bell, guys. Hope I did it justice in replacement of Ramsey. Hope he's doing better. And I wish you all a happy holiday season. We will pass it back to Alejandro here.
All right, Dipka. You got levels for us today? We'll go right back to you.
Absolutely, my friend. We will pull up the chart here. I have a lot of levels because I knew we had PCE today, and I just wasn't exactly sure of where we would be trading come the market open. So it looks like we're going to open up. Let me just double check right here. I haven't looked in a couple seconds. Okay, so yeah, wow, we just sold off some more. We were at 382 a second ago. We're looking at around 380 open here, guys. So 380 at that big psych level. The weekly fib, obviously, I've talked about it on Beat the Bell before. 380 is going to be my pivot. My floor for today is going to be 378.52. 378.52 is where I will look for the S&P to bounce today for a scalp trade. 380, I'll look for break hook and goes. I can play that short and I can play that long. That's my thinking. Now, overhead, main resistance for today is going to be 382.08. 382 has been a solid level on the 15 and the 5-minute chart. You could see, looks like December 20th, you had a double top with some nice rejections at 382.08. If you also look at the pre-market action on the 21st, you have a nice low form there, and you even have pre-market high before the news came out this morning at 382. So that 382 has been lining up nicely. Now we break 382, say Santa Rally kicks off early, we see some, unpredictable squeeze today, and you got 385.07 and 387.04 overhead. Most likely don't get there today, but just in case, got those levels plotted. That's going to do it for daily levels. Let's have a great day.
Over to Mo Mamba now. Mo, he's got some unusual flow for us this morning.
All right, let's pull up the flow. All right, guys. So this was noted yesterday. We also had earnings on Nike, huge gap up. So you got some downside, right? I did note some put flow come in for January 20th expiration. Heavy put flow coming in on this name for that expiration date. As you can see to the right, that premium right there, that's $1 million plus, and it goes up. I set my premium at 50K plus, but you can see the premiums that are coming in are pretty huge. So that led me to look at the chart where we'll pull up right now. If you can bring that up, Ryan, right there. Okay, so this 118.60 level is a key level. You can see all the way to the left how we closed, gap down from that level, came back up. We're able to close above it, and we had some upside, right? Consolidated up there. We had a range of 123.40 to 118.6. Okay, and then after coming back through, it dumped. We had a nice pullback, and then once it made its way back up to that level, August 15th, once it made its way back up to that level, that 118.6, rejected and then dropped again. So we're back up at that level now. You had a nice rejection here. What I'm looking for right now is get that 118.6. If it's able to stay below that 118.6, my first target on this short would be 112.4 and then 107.8. If Nike comes up above that 118.6 and holds, my target for this would be that 123.4 to short from there again. All right, so let's see how this plays out in the next, I would say by the end of next week, we can get a direction on this ticker.
All right, thank you, Mo. Now, guys, it's time for today's top watches, probably the most important segment of the show. We're going to go around and ask our head traders what it is that they are taking a look at headed into today. These are tradable ideas, guys. Make sure you're paying attention. A lot of the times, the head traders take these ideas straight into the Discord and trade them live, and you guys have been seeing that a lot of them have been working out really nicely. So get your notepads out. Let's get ready to go. And we're going to go ahead and start with Coach Dipka. Dipka, what is it that you're taking a look at today?
Yeah, I mean, we could just pull up that same chart. My top watch is going to be 378.52 for a support bounce today. That's really, I just went over it on the daily levels there.
All right, thanks, Coach. Noah, what do you got?
My top watch is not necessarily going to be like a intraday day trade thing, but more of a paying attention for this one into next week and even into 2023 CHPT, possible double bottom. I could also see this one moving higher in 2023 with that sort of tailwind of the whole green energy shift and infrastructure. So we'll see how that one plays out. But CHPT, watching this one at the weekly lows.
CHPT. I have not heard that ticker in a long, long time. That used to be the talk of the town. All right, who else? We got Money Mander here.
I might be getting a little boring here, but until these charts invalidate themselves, they're going to stay my top watches here. So first off, it's been the Apple Head and Shoulders. That's been weeks now. This actually just got to bounce back to the neckline support and rejected off the ADMA on the daily and that neckline support. So this is now back on my watch as we played the breakout of the break hook or the Head and Shoulders there. Now got a break hook and go off of that. It's going to stay on my radar for continued downside. And then NVIDIA that I hit on Monday here with the rising wedge fallout, also just looking really sexy to me for continued downside. Hopefully to that gap fill to like 138. So maybe getting a little boring, but they're still my favorite top watches across the market.
Man, you should just get that tattooed on your chest, bro.
I might as well.
Apple head and shoulders at this point.
I might as well.
It's tattooed in my brain, that's for sure. It's a great looking chart. I think everybody's rooting for you. I mean, Christ, if this thing doesn't go to shit, I mean, this has
very
been
public about this.
Been your personality for the past 2 months.
Yeah,
the Apple head and shoulders. All right, Mo, what do you got?
Uber 24.95, 25, let's say. Support confirmation on 25. I like it for a move up to that 25.4. Fill the gap, 25.35, let's say. I'll likely play this as a 0 DTE. Just not much room for it, but that's a 30-cent move on Uber. Should pay out pretty nice. And on the downside, if we do come down 24.3, flip that into resistance. You can see the consolidation on the run up, and then earlier on the drop, a nice bounce off that level. Form resistance on that to the downside. I'll look to short.
I love it. And last but not least, Snipes.
What's up, guys? I got 4 levels for you guys today. The top level that we're looking at is 382.09. I like this for a rejection level. Under here, we got 381.15. Then we got 380.66. And last but certainly not least, my top watch today will be a bounce off of 379.77.
Beautiful. All right, guys, that's going to do it for this morning's show. Thank you for tuning in. We hope that you enjoyed all the shows this week. We hope that you had an awesome trading week. We'll see you guys back here on Monday, not Monday morning, on Wednesday. Monday we have off. Remember, it's a market holiday. Enjoy your weekend, guys. All right, spend time with family. Get away from the charts for a little bit and come back prepared on Tuesday, ready to make it happen. And then we'll see you back here on Wednesday morning at 8:30 a.m. Eastern time. We'll be ready to roll for the next episode of Beat the Bell. Have an awesome weekend. Have an awesome Christmas, everybody. And we'll catch you next week.